Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your end of day, as well as week and month, as well as quarter video. So we will get through some of the performance, index performance for the month. Theme of the day is September storms, actually kind of the theme of the month, not only with the market, but just horrible weather here on the East Coast. And if you're from the New York City area, hope you're safe with these storms. Really nasty. I'm working from home today. I did not make it into the office today with all of the torrential rains. I think different parts of New York City got 6 inches of rain very quickly, and we just had a storm a week ago that lasted about 3.5 days. Different type of rain, but regardless, crazy. So with that, with both the storms outside and the market finishing, where did the market finish for the month? I think down S&P, where I'm referring to, for 1 month. I don't think this has today's data in there, because if you look at today's data, if I could go back, I think it's 4.7% is what the S&P did for the month. Let me just plug that in here. 8/31/2023. Yeah, 4.7% was the S&P for the month of September. So a down month. I always talk about once I come to the end of the month, I do send out my P&L on Twitter. I will do that at some point this weekend. I will also be sending out a video to members talking about the month and some takeaways from the month. But I finished down 1.8% for the month of September in my trading account. And I'm up for the year now about 26%, roughly. I have to compute that again tomorrow or whenever E-Trade, which is where I do my trading. Once I get my account statement, I don't know if anybody else has noticed this, but your account, their number that they come up with in your statement is sometimes a little bit different than what you see in your account. I don't know why that is, but I've noticed that from month to month, and I do send that out to the U.S. Investment Championship every month, and just notice a little bit of discrepancy. But that's what I see for now, down 1.8% and up 26% year to date. Also for the other indices, so I'm gonna go over all the month performance in the indices as well as the sectors, and we'll draw some conclusions from that. But for today, this was so yes, I'm being a little bit funny, but a lot of fade from the open. I mean, what a way for September to end. Tricky month and tricky day. So at least I guess consistent, right? SPY did finish down on the day about 1/4%. But sold off 1% from the open. Really rallied into this morning's economic numbers, and then we also had 10 o'clock economic numbers that came out, and for whatever reason, the market just wanted to give back those gains. IWM down 1.3%. I'll go over the indices too very quickly. You could see a lot of sectors really got hit hard. And when I look at some of these numbers, it does tell me that maybe there was a little bit of quarter end rebalancing going on. Sometimes these pensions or portfolio trading could really move things around. I mean, look at the banks today, which were at 1.2%, the KRE. So if you were all in the regional banks, you were loving it today, because that was one of the few sectors that actually rallied from the open. I'm being a little bit funny there, but it is what it is on quarter end. Sometimes you do have a little bit of a flip flop of some of the sectors. Energy, case in point, was down, got hit pretty hard today. This energy has, like many other areas of the market, have not been an easy area. Even with the outperformance of what we've seen in crude, and as well as with energy stocks over the last month, there's still not. It's not a perfectly easy trade. And has a lot of bumps a lot of bumps in the road with that trade. The home builders also gave back a lot of gains. They were down 1.9% over the session. Biotech weak again, and so on and so forth. Again, where I'm looking at is this particular column, just referencing what moves happened over the over the trading session. The VIX was up today, but not up huge. Was up 3.8, so it did rally today, but all in all was only up 1% for the session. Still remains at a pretty elevated level. I think we have what, a 17 handle in the VIX. Gold as well just can't hold on to any gains, even though gold is pretty much broken down. That it sold off a total of 1% for the day. Bonds were not a factor. The dollar was kind of interesting. It was at one point, and this morning it was down a little bit less than 0.5%, so down 40 basis points, which is pretty good. But then it rallied back for a good portion of the day. So still finished about flat for the day, up about 0.1%. So still kind of hanging in there. So let me go through just a little bit of the technicals in the indices. Again, I look at multiple time frames, but I start off with especially now that we're at the end of the week. So I'm going to look at S&P futures here. I know some people like SPY, but for now we're holding support. We did come in and met this 42.57.75 top of this year's value area, and for now we're holding it, right? So a hammer bar on the top of value. That is what I want to see hold over the next month. If it doesn't, right, at least, or start off with the next week, but ultimately the next month, if this does not hold and we break into the value area, then you know that we're losing the uptrend. For now, all of this is is price action that is above the value area for the year, where the market is still uptrending, and choppy action, whippy action, I guess everything that you want to call it over the last couple months. But it is what it is. We're still holding the uptrend. We're also holding the uptrend on the daily chart, even though we did test that a textbook, right? Everybody who uses the 200-day moving average must be like, aha, because we came into the 200-day moving average and held it. Again, this is going to be a little bit different when you look at SPY. And when you look at the SPX index, I rely on the S&P futures because there's a lot of volume and it's extremely liquid. It's used by a lot of professional money managers and big investors. So we're holding that, and that's fine for me. Now, if we do not hold this level, right? Because one thing that I noticed today, and in my write-up this morning, I said, hey, it would be great to see if we see a move over the 5-period moving average. We did not see that today. We tested it, but we're still below the 5-period moving average. And that to me is we're still in a pretty weak market. So number one, we held support. Okay, great. But we really haven't done anything since there except for a little bit of a bounce. So if this 200-day moving average breaks, the next thing I would watch is 42.47 on the daily chart. Another thing is we're going to get a new value area for October. Look at the length of this value area. This is really, really a wide value area. Not great if we cannot get into the bottom and into the value area once we get into October, right? So this is right down in here. Again, I don't have a label on this yet because we're not in October, but the trading activity is done for September. So you will see that lit up once we get to Sunday night, and that's right around 43.70. So that's going to be important. So number one, important that we hold the 200-day moving average, the top of value back on that weekly chart. And number two, it'll be encouraging if we can get above this 5-period moving average and this bottom of value. And I think that's really enough to kind of go on. I don't think I need to go too much into the 1-hour charts other than, we did not take out this virgin point of control. We got very close, and it looks like we could be opening up inside the value area for next week. All right, so that's a lot, right? But this is how I break things down. I try to basically look for the path of least resistance when we go through the different time frames. Obviously, it's a complicated situation right now, right? When we're trending and when we're above all the value areas, it's very clean. Right now, these are not clean looking charts. Qs on the weekly chart, we're still way above the value area for the year. So then considering I can't really make too much of a conclusion there other than we're still uptrending. We did take back the 5-period moving average here after, could be we don't know if this is a false break below the August lows. I mean, it's not a false break. It is a real break below the August lows, but we recaptured it, right? So we'll see if we can stay above this 5-period moving average, and we'll just keep it simple there with that one, a little bit more simpler than the other one. IWM is a complete mess. We know that it's still inside value. There's a great question from one of the traders at Tribeca Trade Group earlier about what index do I prefer for the rest of the year? Well, it's certainly not IWM. This is just too difficult, right? I stay away from things. Some, what I've noticed with younger traders is they like to try to figure out the hardest things in the market. I have learned that the messiest and the more difficult things I stay away from. And this is too difficult. We are inside value, but completely sideways, and sideways for a long time. We did test that version point of control, right? And we bounced from it, but we are below the 200-day moving average. So not a great look there. I might as well just go over bonds with you really quickly. We have a nice hammer bar off of yesterday's price action. We'll see if we can do a little bit more than that next week and get above its 5-period moving average, but not so much. Look at the volume, by the way, that's happening right now in some of these fixed income products, right? TLT also very big volume. If we go to the weekly chart, you're going to see a huge volume bar there too, and I think that's the biggest volume. I'll have to go. Wow, look at that for TLT. I'll have to go back and look to see, but that's definitely going back here. Wow, is that the biggest weekly volume ever for TLT? Wow, it looks like it is since its inception. I can't go back any further, but I will double check that after this video. That's pretty amazing to see that. So maybe that provides, after a decent move down, right? Maybe that is somewhat, let's say the C word, capitulatory. We will find out for next week. All right, so that's the indices. Like I said, I was going to go through this month's action rather than just the week's. So again, when you look at the price action, month to date, right, S&P was down 4.7%. The diamonds actually outperformed a little bit, down 3.4% for the month. Mid caps, small caps, both underperformed, down well over 5%. The transports were down 6%. Qs were down 5.1%. Both of the international areas actually outperformed, even with the currency effect. Kind of interesting there, right? Because they are short the US dollar, synthetically, right? It's a basket of local stocks there. TLT, and look at the performance of TLT for the month. Holy cow, down 8% for the month. Gold's down 4.7%. The dollar, only thing positive on this first in this first area, and that's not good. I laugh because it's not good. Up 2.9%. Some of these other areas of the market, growth underperformed, down 5.7% versus value 3.2%. Equally weighted indices, ugly as well. Both of those down more than 4%. The ARK innovation, just a couple ETFs that I like to look at just for reference. ARK was down 9.3% for the month. The IBD 50 ETF was down over 6%. Wow, look at that underperformance. Just shows you again what kind of market we're in right now. Very much that if you the last, and this again is very much what September brings, is that it's a very, very whippy market. And when you're in a market like this and you start adding names that look like they're breaking out right at the breakout zone, just a lot of failures at breakouts, right? So this market acted very much like a bear market, right? In which a lot of breakouts fail. And I know that that's kind of their philosophy, right? It's kind of more of a momentum basket that they have in there. They do have a lot of turnover, but just interesting to see that. Best areas for sectors, you have to jump to this column, so just make sure that you do that. The pot stocks had a big month, but really coming from, I mean, look at the price of this stuff. I shouldn't even have this on the spreadsheet anymore, because it has just been a massive underperformer. Energy stocks, here were the bright spot for the month, up 2.4%. OI, that's XLE, actually did better out of OIH and XOP, which was just flat. So again, it mattered what energy stock that you were in. Metals and mining up 1.2%. You may ask yourself, how did I, no, I'm just kidding. You may ask yourself, why did they outperform? Well, it was interesting in the XME ETF. You actually have a lot of coal stocks that are in the XME ETF. So those were part of the reason for the outperformance in the equally weighted metals and mining basket. So and if you look at this basket, right? So XME, and you look at the whole, remember, it's equally weighted. So you're going to see the better names on the top. And sure enough, Arch, AMR, BTU, CEIX, right? Those four names are your, again, they're not that top heavy, because every quarter the components get restruck back to equal weight. But what floats around from quarter to quarter is the price. Prices go up, the names become larger in the index. So very interesting to see that. And besides that, then you've got a lot of names that underperformed. Look at the financials actually did outperform this month, up not up, but down 3% on a relative basis versus, when I say outperform and underperform, it's versus the S&P is what I'm getting at there. But they actually did a little bit better. The communications did okay. Remember XLC, that's a lot of Google, Meta, and Netflix. That was down 3% for the month. Steel names, not that bad as well. Then when you start getting into some of these areas like industrials, which broke down a bit this month, down 6%. Transport's down the same. The self-driving ETF looks like it crashed. Just kidding. It was down 6.4%. Tech was down 6.5%. Big difference between tech and XLC, since they stripped out Google, Meta in that ETF. Semis were down. Semis got walloped this month, down 7% this month. Medical devices, another fallen group. Biotech, just horrible month, down 7.8%. Gold miners, interesting, no relation at all. Maybe the dollar is the one factor in here, but both of these groups down close to 8%. Aerospace and defense down even more. The home builders finally succumbed to higher interest rates, down 8.8%. And then, of course, you have your clean energy stocks, which have been the worst of the worst. They are down, or I think this column is year to date, in a market that has excelled very well this year. You're looking, where are we right now in terms of what the Qs are up in the S&P? I should have these. The S&P is up 11.8%. That may be off a percent. Again, these Excel formulas sometimes are a little bit off from taking the information from Bloomberg. And the Qs, it says, are up 34%. And then you look at your clean energy stocks, and wow, solar down 29% year to date. All right, guys. So that's just a quick summary of how where we're at in terms of end of September. I will say this, I would think about, as I will stress in my end of month video to members, make sure that you're taking away some lessons. One of the things, this is not these types of markets. Well, I don't think these types of markets are a lot of what people really like, but it's, for me, I'm a trend trader, and I do play a lot of momentum, right? These months are very difficult, right? I have to change my style around, right? You have your choice, right? You could either, if you're very good at a particular style, right, and the market is not conducive or not, is not exhibiting that type of style for you right now, right? You could either choose to sit out, right, and wait for the market to be just in a better environment for your style. Two, you can make adjustments, and that's kind of what I try to do, is make some adjustments. Those adjustments are just trading a little bit different in terms of how I trade the technicals, and it's also really just making sure that I'm taking less risk, right? And that's mainly position size. It's also quantity of positions, right? And just understanding what type of environment it is, and also using things like the McClellan summation index, right? To know that the breadth has been horrible, right? We've been in a bearish crossed with a 10-day moving average, I think basically for just about the better part of the month. I think it flashed, it crossed over to a bullish crossover at the end of August, and then it flipped back in the first week of September. So, right, those rules can really kind of keep you out of trouble. So, I'm not exactly, I would have liked to have a positive month this month, but for basically, trading all the way through it, I said this in August too. It would have been better, hindsight 2020, to be sitting on the sidelines. But I run a trading room, and I'm going to be present. I'm also going to be looking for things on the tape and so forth. You just really have to be. This was over the last 2 months. This is really a situation where, again, I use a lot of analogies in my trading. I talk a lot about sports. Poker is also a really good analogy, but right, this is only one of those. Poker. What a lot of professional pokers do is they fold a lot of hands. They don't play. They only play the best hands, right? And this was a situation where you just weren't dealt a lot of really good hands, and the more that you played rather than folding, your results were probably dictated by that. All right, guys, that is it for the end of the video. Just a quick reminder that if you want a quick trial to the Tribeca Trade Group, and when I say trial, it's basically just seeing what our midday note is and what our end of day note looks like, so that you could follow along with how I basically set up, my watch list, as well as, so the names on my watch list, the performance of my watch list, how I take trades, because I do provide the charts, the chart setup of what I'm looking at when I do get into a trade. So you get all that for free for 5 days. You just have to put your email in there, and there's no other obligation. So that's it for this weekend. And again, I look forward, things will change. We know that this was a very difficult seasonal period. We're going to be getting out of that seasonal period, and hopefully we'll start to see the mechanics of the market, right? Some of the dynamics under the hood, such as breadth and some other things, as well as some watching for things that we went over in the indices. We'll see if those will improve, so that we have a better environment in front of us. All right. And if it doesn't get there, it doesn't get there. You have to continue to only play the best hands. All right, guys, have a great weekend, and see you on Monday.